Amazon and Alphabet are two of the most successful companies in the world. Investors are asking me which one is the better stock to buy today. Well, they each face some big challenges in the near term. Amazon faces the risks to its business from an increase in tariffs, and Alphabet faces a risk to its business due to changing consumer search behavior, shifting more attention to large language models and less attention to traditional search queries, which could upend its business model. So, given those headwinds and given the long term prospects, I'll evaluate these two companies, compare their revenue growth over the previous decade, their profit margin expansion, and return on invested capital. I'll also share with you my proprietary discounted cash flow valuations, which calculates a fair value for Amazon stock and Alphabet stock. I'll do all that and then answer which one I think is the better buy at current market prices. Let's jump in.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
All right, so looking at revenue growth from 2015 to 2025 here, Amazon has increased its revenue by more than 6x from 2015 at 107 billion, growing all the way to 670 billion in the trailing 12-month period. Meanwhile, Alphabet has expanded its revenue from 75 billion to 371 billion. That was good for a compounded annual growth rate of 18%. Meanwhile, Amazon has increased revenue at a compounded annual growth rate at 21% in that same time. Looking ahead at revenue growth prospects for the future, they both have similar expectations for future revenue growth. Amazon's recent revenue growth has slowed to around 10 to 12%, while Alphabet's revenue growth is closer to 20% as the company is accelerating revenue growth in its cloud segment. It has some new businesses like driverless car technology and Waymo driving growth in that category. Meanwhile, Amazon is encroaching on Alphabet's space, generating increasing revenue from advertising, which has now become a large business for Amazon. The next thing I wanted to compare these companies on is profit margin. Alphabet's profit margin has expanded from 25.8% operating margin up to 33.2% operating margin. So the operating profit margin counts a company's revenue and subtracts all its operating expenses and delivers the operating profit margin for the company. It's an indication of how lucrative the business model is, and it excludes some non operating expenses like taxes and changes in the equity value of some of these companies' holdings. Meanwhile, Amazon has increased its operating profit margin from 2.1% in 2015 all the way up to 11.4%. So while Alphabet has the better operating profit margin, roughly 3 times better than Amazon, Amazon is closing the gap quickly. You can see from 2015 to 2025, its operating profit margin has improved by roughly 5x from 2.1 to 11.4. And given the improvements in the business, given the faster growth in its more lucrative segments, I wouldn't be surprised if Amazon's profit margin continues expanding, approaching 20%. Still, Amazon's profit margin is weighed down by its e-commerce segment. Even though it's getting more profitable to operate those segments, the large capital expenditures required for its e-commerce segment keeps down its operating margins while increasing its revenue and revenue growth expectations. The next metric I wanted to compare these two on is the return on invested capital, and we see a similar story with Alphabet having the better number, but Amazon having the better improvement. Alphabet at 30.4% is slightly above or 10% above where it was a decade ago at 27.8%, while Amazon has more than doubled its ROIC from 6% to 13.7%. Alphabet and Amazon have outlaid or have committed to large capital expenditures in the last, I want to say, 2 years for artificial intelligence. Amazon is forecasting spending over 100 billion on that category in 2025 and increasing that next year and the year after that. Alphabet similarly is expanding its capital expenditures to around $80 billion in 2025 and forecasting continued expenses increasing from that point onward. They've also told investors that spending in artificial intelligence is such a no-brainer that they will continue spending as long as they see demand for that part of the business soaring the way it is. They both said that they have more demand for artificial intelligence than they can supply. And so they're investing to increase their supply because demand for the category is booming. So now that we looked at the critical financial metrics, let's get into valuation. And what you're looking at is my proprietary discounted cash flow valuation model. And this calculates what I believe a fair value for Amazon stock is today, which I calculated it to be $251.60. That compares well to the current market price of $224. You can say that Amazon stock is about 10% undervalued according to my valuation criteria here in my discounted cash flow. Similarly, Alphabet, I calculated an intrinsic value per share at $228 compared to the market price of $202. Again, according to my DCF valuation model, Alphabet stock looks roughly 10% undervalued. Another thing to consider is the weighted average cost of capital for Alphabet is 9.76%, and for Amazon, it's 11.5%. Amazon boasts a beta of 1.31, while Alphabet boasts a beta of 1.02. I also like to look at valuation on another perspective, and in this case, I'm going to look at it on the forward price to earnings basis. Amazon is trading at a forward PE of 32, while Alphabet is trading at a forward PE of 20. So Alphabet stock, according to this valuation metric, is roughly 50% undervalued compared to Amazon, or 50% cheaper compared to Amazon. So Amazon, delivering better performance improvements, has the larger total addressable market opportunity. Alphabet boasts the better margins, the better profitability metrics, and the lower valuation. Very close decision here. I actually have two of these stocks are in the top 7 stocks to buy this year according to my rankings. I started that ranking to begin 2025. I placed Alphabet and Amazon as two of the best stocks to buy this year. And I recently updated that recommendation and again reiterated that I think these are two of the best stocks you can buy. So trying to decide between two of my favorites is a difficult decision, and you can see on the critical metrics I considered why that's so difficult. They also have big risks. They both face big risks. Amazon with the risks that tariff place on the business model, and similarly Alphabet with the changing consumer behavior, spending more search queries towards sending more search queries towards large language models away from traditional search, which is not monetizing as well for Alphabet compared to its legacy search engine business. So it's a really close decision. It's a really close call. But if I had to pick just one of them, I would pick Alphabet as the better stock to buy. Again, I like both of them. I have them both rated as buy. I have them both rated as two of the best stocks to buy. But if I had to pick only one, I would pick Alphabet. Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.